Window down, yelling out money, anything. Ayy, ooh, got the foot on the gas. Pedal to the metal when I'm getting to the back. Ayy, got the foot on the gas. Pedal to the metal when the lane moving fast. Ayy, ayy, let them all cross. If they hate, then let them hate and make a bigger boss. Ayy.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do, or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Tuesday, everybody. I can feel how much everybody hates being at work this week. Like I can just, the sentiment out there on social media, all of my cold calls to the people, all of my prospects, you can just like hear and feel the annoyance in everybody's voice. It's wild, but completely expected out there on the week after a holiday. And these are like my least favorite weeks to work, because like I was working throughout the holiday. We were very fortunate. We were busy actually, which is kind of surprising because we move 99% flatbed freight, and we were surprisingly busy around the holidays here, which was awesome for us. And but like I know not everybody was. I know a lot of people took a couple of weeks off and everything. So it's just like when everybody else is reacclimating to the workforce, it's interesting to say the least, but nonetheless, you got to just continue to go out there. I think out of the 30 cold calls I made yesterday, I think 5 people actually answered the phone, and none of them were thrilled that they were receiving an inbound call at that time. But it is what it is. I got a family to feed. I'm going to continue to show up out there. But today's episode, you guys, it's going to be a solo episode. I'm going to be giving you guys like a little bit of like live market guidance out there. Like I was saying last year, I'm going to be very much emphasizing on doing once a week solo shows where we're going to be doing like actual market reports. I'm going to be giving you guys advice and guidance on like how I would quote this stuff out, what trends I'm looking for out there, and just some of those meaningful things, because again, there's so many headlines that are coming at you at any given moment. And frankly, I take all of them in, but like I also got a business to build, right? Like I got a family to feed, as every single one of you does as well. So we're going to be continuing to do that out there. So we're going to be doing that today, and then we're going to be breaking down a couple of articles. Just another quick reminder, our weekly newsletter drops tomorrow. Again, I don't auto sign anybody up for anything of my stuff, frankly, because I don't know how to do it for starters. But then secondarily, I hate when people just auto sign me up for stuff because they have my email. But if you want to get in on our weekly newsletter, you guys, again, we only talk about freight, diesel prices, the market, everything else. I need you to go to thefreightcoach.com. It'll auto prompt you to register right there. And again, it's once a week, every single Wednesday. That's it. There's not any, thing. I don't even know where. I don't even, to be frank with you guys, I don't even know what software we use to do it all. So like, I have no idea who's even signed up for it. But I know it's growing. I know we got like a lot of people who get it every single week. But if you're nervous that I'm going to sell your email address, I wouldn't even know how to do that. So, but if you want to get on it, go to thefreightcoach.com. But speaking of the freight market, let's do a little lane analysis here, you guys. And I personally use DAT a lot in my business, as I know a lot of you guys do. And again, I just chose a random lane as we're going here today, because again, I want you guys to see market disparities and then going into a good market, leaving a bad market. And again, this was completely random. This was Kansas City, Kansas, going into Minneapolis, Minnesota. It's a reefer trailer. So if you're moving reefer freight out here, here's some free game for you. Look at the stability. I don't know if you guys can see this, but again, there's stability out here over the last 90 days, $1,133. So drivers, if that's what you're not getting paid out there, pay attention. But again, look at the year mark. It's at $1,100 going into that market. And again, it's 440 miles going up there. The last 15 days, though, and that's where the spike, I want you guys to pay attention to that. We all know what was going on during that time frame. Christmas, New Year's, and then you're going to have that holiday hangover into that. So again, it spiked up to, 1275 going into that market, and then it kind of tapered back off. 1250 is where it's at. So again, if you're out there and you're pricing out that freight, I don't know what you're going to bid on that stuff at the end of the day. But from my perspective, as you're going in there, you're marking it up accordingly. Say you're going off of, let's just go public school math here. You were paying $1,100 for the last year. You were probably bidding $1,250 on that lane, for example. So that's that time where, again, for those 12 months, realistically, yeah, there's probably some spikes out there. You're gonna be making a decent margin on that. Then during those holidays, that's kind of those direct correlations to those tender rejections, because some people refuse to lose money, which I think is such a losing long-term strategy. But again, you break even a couple of times throughout the year, depending on how that volume falls, and that's it. But again, like, you need to stay firm on that, because if you do the inverse lane, Minneapolis going down to Kansas City, look at that. It doubles. Look at that price difference. So again, any reefer carriers out there, looks like Minneapolis is a pretty friggin' hot market, especially during the last 15 days in particular. I would expect that to taper back down because a lot of that probably has to do with the holidays as a whole, as you guys can see. But again, 1,850 to 1,900 looks like the rate for the last 90 days, and that's pretty stable out there. So again, take that into consideration. Reefer carriers, if you're not going into Minneapolis, it looks like it might be a solid thing here for the next couple of days. We'll see where the market trends. But as a whole, you guys, I look at that, and that's why it's like that stability where I'm looking at a lane. So again, when we were going out here and we were looking at Kansas going into Minneapolis, I would even hold my foot down even further on my carrier partners as a broker. If they're getting that much coming out of Minneapolis, again, like, there's that case to keep that stable long-term pricing. But again, if you're out there and you're booking carriers at the level you should, and you're using those repeat carriers, they're going to take that for $1,100 nonstop, because clearly if they're running that region out there, they know the seasonalities, they know those hotbeds of what pockets are starting to ship out, and they're going to increase their profitability. So going into Minneapolis, they're going to be all the more likely to take that for that consistent, I'll use air quote contracted rate that you're going to have with them out there, because they know they're going to get paid coming out of Minneapolis. So, take that into consideration, you guys. Again, we look for the stability. That's what I pay attention to the most. I look for the stability in a specific lane, and then I look at the inverse. All right. I look at the outbound lane here. Okay. What is it? What are they getting coming out of there? Do I have any justification for keeping my rate as stable as I possibly can? But again, if we're looking at it from the overall year-long perspective there, you guys, you're going to have to eat it on some of that things. But like, that's just the way it goes in freight, especially if you're a broker. You got to keep your rates as consistent as possible. I try my absolute best, and we honor this with our customers, because we don't have your quote unquote RFP style freight yet. I'm sure this year we're going to win a lot more of that, but we don't. We're a lot of truck in hand pricing. But again, you can bring stability to your customers to keep that rate the literal exact same throughout the year. Because if you're booking the same carriers time and time again, you have more stability, you have more consistency, and they're not raising their rates. At least not in my experience, at least not in my book of business. Our carriers are keeping their rates the exact same going on there. So that's why I'm able to deliver that RFP pricing to our customers, to where there's no, and again, when I say we move flatbed, you guys, like, we bid everything sometimes 3 to 5 months in advance, and we're able to keep the exact same pricing out there, so we can keep that profitability baked into our customer. Because at the end of the day, our customers are putting their bids together because there's competitors and everything, and we're not eating into their profit margin that they do for all of their pricing when they're selling all of their products and services out there. So we're able to keep that stability, to keep their profitability from transportation coming in at an all-time high. But if we look at the overall market, obviously there was a lot of talk in December, and we're going to get into that in a couple of articles here, you guys, but I just wanted to give out the national average for rates right now that we're seeing. Dry van is $240 a mile, flatbed is $262 a mile, reefer is $291 a mile. And I look at that again, and like you look at the national average, but then you go back to that Minneapolis to Kansas reefer lane, it's like $6 a mile. Again, I went to public school, but 430 times 6 is like 2,400 ish. So take that with a grain of salt when you look at some of these national averages that are going on out there. Again, tender rejections overall was at like over 13%. My gut, and I'll get into this with this article here in a little bit, is it was very seasonally adjusted due to the holiday. But, again, we look at where things are coming. I look at it is if capacity is going to continue to tighten, it is yet to be seen. And again, I'm going to not say as much on that because we got some articles to break down on that, you guys. But again, those are those overall rates. But, it looks like spot rates have risen steadily overall. And I'm just going through some of my notes on a lot of the data that we use. Freight volumes remain seasonal and stable. The market is highly sensitive to fluctuations in demand. Capacity reductions could continue to increase carriers' pricing power, and any sustained rise in freight volumes could trigger rapid rate spikes out there. Again, I look at a lot of different data sources, you guys, and I try and convey a lot of this messaging to our prospects, to our current customers and everything else, just kind of keep them informed on it, because the days of we can move your freight are dead, you guys. It's long, it's gone. There's so much data, there's so much information that's at your disposal, and there's so many free tools that you guys can use to create some of this stuff. You need to get ahead of it. But that being said, you guys, let's break down a couple of articles. And as always, you guys, the links to every single one of these articles will be uploaded into the show notes there on iTunes and Spotify. So if you want to read these, which I would beg each and every one of you guys to do that, check them out on there. First article we're going to break down today is from ttnews.com. The year ahead will test DOT power to withhold state funds. It goes on to say in 2026, the Department of Transportation and the FMCSA are poised to test their regulatory authority by potentially, I want to emphasize that word, potentially, withholding federal highway funds from states that fail to enforce federal commercial driver licensing standards, especially regarding non-domiciled CDLs and CDL learners permits. Triggered by national audits in 2025, the DOT found widespread non-compliance among states' licensing agencies for issuing non-domiciled credentials to applicants, often extending the validity past lawful U.S. residency and failing to verify status properly. Some states, like Nevada, proactively stopped issuing these credentials after failure rates reached as high as 99.5% in sampled records, while other states such as New York, Texas, and California also showed systemic issues. Secretary Duffy and FMCSA Administrator Derek Bars stressed that the goal is safety and compliance, not conflict, and expect states to complete corrective action plans. And then if they don't, the FMCSA could escalate measures up to withholding millions of dollars in federal transportation grants. Meanwhile, the interim federal rule remains on hold due to a court stay while the agency considers comments on the permanent rule out there. And again, I think like there's a lot to unpack with an article like this, because I was talking about this on yesterday's show, and if you haven't listened to that yet, I had Pam Polyak on the show. Polyak Trucking, multi-generational trucking company based out of Wisconsin. And we were talking about how challenging it is for carriers to operate legitimately. Like think about that, right? You would think that the legitimate carriers who are great safety scores, paying their insurance, been in business for a very long time, that they would have an easier way to navigate during this time. And they're not, right? So it's like, I stand by setting a federal standard. As I mentioned on yesterday's show, and I will reiterate this here right now, I am the last person that wants more government overreach on anything. I truly am. But I look at where this becomes a critical issue. And I say critical because I don't look at this as like a state by state decision at this point. I look at where this is. And when we're looking at interstate commerce, when we're looking at crossing state lines, for example, I think that that would like ultimately trigger like a federal oversight. And I think that at this point with where things are, and again, this isn't a red, blue, left, right, anything like that. When we look at the failures of multiple states to actively monitor these CDLs, and I'm not against visa holders at all. I've already put that out there. I'm not going to get into that at all. But when they're able to operate on an expired visa, when they're able to, and when they're continuing to operate when they shouldn't be, again, I want everybody to be held to the exact same standards. If I break the law as a US citizen, if I break the law as a business owner, I lose my business and I potentially go to jail. I just want to see a set standard across the board for everybody to where you're not able to do that, and that the punishment is extremely severe, that it deters people from doing that. And I think that if we're going to have CDLs and you're going to participate in interstate commerce in any capacity, there needs to be a set federal standard. And this is where I think, to apply the short-term pressure, withholding funds is the right move. I truly do, because that's how you get people to actually take action there. Because if not, they're just going to continue to operate in that capacity, and then we're going to have the exact same problems. And then, again, the compliance failures, again, like if we're about safety, I look at it like this. If you're going to operate a truck knowingly on an expired work visa or the wrong visa, what else are you doing wrong? What else are you not doing properly, right? Like, I don't think everybody, like, I truly think if you're willing to overlook certain aspects, you're willing to overlook a lot of them. And again, it's just like, it's very simple things and very simple policies that should be held to. And this is why it's like, I look at the fact that like this is a very long uphill battle. There's going to be a lot of bureaucratic back and forth on this, which there always is, which is ridiculous at the end of the day. Like, I want them to go in there and act fast and quick and reset this, because again, I feel like the way to get a CDL in the state of Washington should be the exact same way in Florida, and all of those standards should be the exact same. Like, I think that we've overcomplicated this process, like, for whatever reason, probably money, but I think like there has to be a set federal standard. And that's why it's like, I hope Secretary Duffy, the current administration, all of that takes it and they look at it from that perspective. Like, hey, yeah, you can have a state issued California CDL, but you have to follow this criteria, and it's a federal criteria. Again, I went to public school, so maybe I just look at things a little too simply. I just don't think that this is as complicated as they're truly making it out to be. And states are going to sue, everybody's going to sue, and it's just going to go into a longer uphill battle on stuff. But I don't think anybody can argue. And I would love to hear somebody's counter argument on why we should continue to operate in the exact same capacity that we are, and why people should get the ability to illegally operate their business and make money while we can't do that. So again, I would love to hear the opposing argument to this on why there shouldn't be a set federal standard, and why there shouldn't be severe repercussions for people found operating their businesses illegally. Because I feel like that's where this is at. And I feel like the current system that's in place right now completely allows that. And that's an issue. And it looks like the current administration is doing something about it. I think they need to move faster. And I think that there needs to be a set federal standard across the board for how businesses, trucking companies, CDLs, everything is issued. I do not think it's as complicated as people want to make it out to be. We've made it way more complicated than it needs to be. So that's why I hope they go in there and make swift action on this, and these lawsuits get wrapped up very quickly. But that article, you guys, is from ttnews.com. Year ahead will test DOT power to withhold state funds. And I hope they do, because money gets people to act. And I hope they continue to do what they're doing out there. Next article that we are going to break down. This is from my friends over at the JOC. And that is separating myth from reality in dry van truckload capacity. Give me just 2 seconds here because I got to scroll down. There we go. Dry van spot rates surged in December. But is it more about prolonged capacity exit than a suddenly regulatory crackdown? Data from Bureau of Labor. Oh, this was written by Jason Miller, by the way, professor at Michigan State. Data from the Bureau of Labor Statistics shows dry van truckload capacity has fallen 7.5% since early 2023, with payroll headcounts down to levels last seen in 2017. And most of that decline occurred before the heightened enforcement on the immigration statuses out there. At the same time, freight demand growth remains soft. The trucking ton mile index grew only 0.8% year over year in Q3 of 2025, far below growth rates during the past expansion cycles. Weakness in manufacturing, housing, and energy suggests, demand in 2026 will remain muted. And that's kind of my stance as well out there. I think that there's a lot rolling on interest rates and where a lot of the building, because again, everything starts and stops with flatbed, you guys. I hate to break it to the drive-in and refrigerated guys out there, but if the flatbed market is down, everything's going to be down. Carriers are unlikely to add trucks, and we were talking about this yesterday on the show as well, especially when it comes out to tender rejections and everything else. I said this back in December. Here's just another quick reminder. If they remain elevated through January, I think that's the time that people should look at this could be a legitimate sign of a recovery. Now, I already saw this morning they have dropped. They were peaked at like 13%. They're back down to like 10.5%. My gut says they're going to continue to fall back down to where they were because I think it was a complete seasonal push that caused that. There was weather patterns out there. And again, you guys, a normal freight market between Thanksgiving and Christmas always has a tons of volatility. If you remove these last couple of years, you guys, that is so standard for that time of year. That's why I had said last month, I'm not buying into the hype. I think it is hype, and it's already starting to taper back down. And again, you guys, like, I hope I'm wrong because like I have a day job, my brokerage, that would very much benefit from a lot of volatility that's out there. And, but again, I got to go with my gut, and my gut's telling me it's completely seasonal. And it's going to taper back down, and we're going to find ourselves back into that range here come late January after the holiday hangover truly wears off. And then that's why I don't rush to judgment on anything. I wait for things to play out because I've seen this before. I've seen this so many times before. I just, agree with this article in particular that the capacity tightness is it's market driven. I think that more and more carriers are exiting the market. Yes, there's going to be some regulatory pressure that comes into effect, but I also look at it from a freight volume perspective and everything else. You guys, the amount of businesses that fail is alarmingly high. That's why I'm always out here telling everybody, if you're thinking to go into business, is really like think twice. Like, I'm not going to stop anybody from going after their dreams, but like it's expensive to do anything, even a brokerage, even being an agent, everything else, it can be expensive. And you have to plan for that. It talks about in here that demand growth is weak. And it's true. There is a lot of weakness in the demand growth overall in the freight market. It's just not booming. It's not collapsing anymore, which again, you could look at that as a stabilizer. But I also look at it as there's a lot of improvements that need to happen in a short amount of time for me to change my opinion on that. And that also goes into the fact that I don't know if anybody's going to rush to add trucks to their fleet based on what a couple of week pattern in December played out to be. I think at the end of January, if things remain elevated, now I know that it dipped back down the tender rejections here as of this morning from the last time I saw. If it starts to spike again and it continues to go up, probably a good sign. But until that happens, I just don't think there was going to be any meaningful change. So I just do not think anybody's going to add any capacity, buy any trucks or anything like that until the end of this month. I think they have to look at it from that perspective because, again, if you look at interest rates and everything, interest rates are still high, right? Like, you're not going to want to go out there and buy additional trucks right now if by mid-February things start to taper off. So again, those are things to take into consideration out there. And then, I look at it as, from a shipper's perspective, I wouldn't overact at all. I think that things are going to settle back down here. And again, I hope I'm wrong because my brokerage will benefit from it. Carriers, get your money. I'm always going to tell carriers to get your money. Get your money. It's a free market. You guys are going to get it at some points. Brokers are going to get it at some points. And yeah, that's it from that one. But, again, from that article, JOC.com, separating myth from reality in the truckload capacity, I think it's not as drastic as people are or were trying to make it out to be. And I just don't see any meaningful things happening here in the next couple of weeks. Again, pay attention to that. If rejections start to rise again and remain elevated and continue to rise, there's your sign. I'll say that. Third and final article, freightwaves.com, 2025 peak retail season, the best for trucking in years. It goes on to say that the holiday peak season catalyzed one of the strongest trucking markets seen in recent years, reversing much of the downward pressure carriers experienced earlier in the freight cycle. After years of loose capacity and low truckload rates going in, Q4 of 2025 saw elevated tender rejection rates and stronger spot rates as seasonal freight volume surged and winter weather roiled the supply chains. Tender rejections climbed above 13%, and spot rates jumped nearly 19%, reaching multi-year highs, a boon for small fleets and owner-operators, but challenging for freight brokers. While the capacity continues to tighten, demand fundamentals remain uncertain heading in. Again, I think everything that we saw between Thanksgiving and Christmas and New Year's was a normal seasonal increase. And now normal might be hard for people to comprehend if you've never operated in freight pre-2021. All right. But back in the day, and I fucking sound so old when I say this, but that is how the holidays were always. Every single holiday, 2011, 2012, 13, 14, 15, 16, 17, 18, it was all the same. Between Christmas and New Year's and Thanksgiving, it was a shit show at times. All right. So a lot of what we saw was standard. And that's a good sign though, because that to me, that's a stabilization point that we haven't seen. So again, even if tender rejections drop back down and rates continue to drop back down, which as of this morning, again, it looks like that's what's happening. That is like a stabilization point that we can at least benchmark on that. Hey, maybe things are going to actually improve out there. Again, I think it's too early to tell. I look at it as it was great for carriers. It was great for owner operators. I saw some people posting about how it's just funny how the tonality of people change online when carriers ask for more money out there when, that's just a free market. You can't advocate for a free market and then bitch about the free market when it's not in your favor. That's not the way business actually runs. But, again, I think that capacity leaving the market is definitely something to continue to monitor as a whole across all major modes, dry van, reefer, flatbed. Again, I don't know if it's going to be complete all regulatory pressure that's going to cause this, or if it's just going to be the fact that people are running out of money and they can't continue to make it out there. And again, I just look at 2026 overall. Again, I hope I'm wrong. I just think it's going to be very similar to 2025 as a whole from an opportunities perspective. I feel like you need to baby every single relationship that you have with all of your shippers out there. I just look at if there is any meaningful increases out there, they're going to rely heavily on their current network of providers, and the need to possibly look out is just going to continue to stay muted out there. But again, get in front of as many people as possible as a whole. But that is going to be it for today, ladies and gentlemen. That article was from FreightWaves. Check that one out. As always, if you guys got value in what you heard, which I know you did, and if you're not subscribed, and based on the data, 70% of you who tune into this show every single day, which there's a lot of you who do, hit subscribe. If you get value, rank it on iTunes and Spotify. Share it out there to your network, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.